Happy New Year, fellow Earthlings, and welcome to the final episode of the first year of the Space Times podcast. For this special episode, Paul and I would like to share with you our predictions for the space industry in 2026. We'll be extrapolating upon the patterns that we've seen over the past year to predict what we think will happen in the sectors of geo, space defense, direct to device, lunar exploration, national competition, and the overall market. We hope you enjoy this special episode, and as always, drop us a comment, check out our socials, and please follow us on Spotify, Apple Podcasts, YouTube, or wherever you're receiving this signal.
One of the big trends that we've seen this year is that the traditional traditional geo-based telecommunication satellites, the massive, super expensive $500 million asset, that model is rapidly being phased out. That model no longer works.
Yeah, these are
So
dinosaurs, both in size and in age.
I think this year we saw a half dozen geo satellites get bought, contracts for I think six. I would expect to see for 2026, I would expect to see another half dozen to dozen geospatial satellites get purchased. I would expect to see that number actually increase. But I would expect all of these satellites to fall into the quote unquote the new geo side of things, where the price point for these satellites is closer to like 75 million, 50 to 100 million, rather than the like 300 to 500 million. So I
Yeah.
would expect to see geo get smaller and get more proliferated, much in the way that we've seen LEO do so. But I would expect to see 90%, 95% of the traditional monolithic geospatial satellites capabilities be made available at a much cheaper price point. And so I would expect to see some growth in the total number of geo constellation or total number of geo satellites that are bought in the next year.
Yeah, I think they're going to become more just because they're going to become more fractionated. I think the large geocom satellites are kind of done for. They've been saying that for a couple decades now, but I think just I don't know, just off of the fact that like when EchoStar sold, they're like we can't operate our constellation anymore with HughesNet. Like the fact that the companies have been doing this for decades are starting to say that they don't even want to operate their own satellites. Just to me signals that there's not really a market to be had there. And the fact that only like 4 out of the 8 satellites bought this year for Geocom were large traditional Geocom satellites, is further indication that there's just not a demand for it anymore. I think a lot of it is being driven by these mega constellations coming online, like Starlink, which
Yeah.
is only going to grow. The fact that AST Space Mobile just started launching, OneWeb has another tranche lined up to launch. I think these are going to phase out the need for a lot of large throughput satellites. And what we'll see more of are the smaller ones that are able to kind of fill in the gaps. So, some of these constellations, they still have gaps in certain areas, and maybe those areas need higher persistency or higher, lower latency. So having companies like Astranis who have their kind of, focused, targeted capabilities can kind of back up those constellations and provide increased capability in certain geographic regions, which I think we're seeing a lot of this year is that conflict zones drive higher demand for satellite capabilities. And that doesn't really work with constellations because they work on a global scale. So the demand for geo, I think, is going to be a lot more focused on very targeted geographic regions. So I think we're seeing a lot of the activity in geo that's kind of new this year is RPO and space to space warfare kind of efforts between China, France, UK, America. They're all working on defending their geo assets, which to me signals that there's a defense need for that space domain. And communications is still the primary use case that makes sense out there. I don't think in the next year we'll see some of the more out there use cases like data centers or space solar power that make sense at a further out distance. But we'll probably start seeing some moves towards that technology as well. And I think K2 Space is probably the person with the biggest head start, especially as Starship becomes operational after its successful launch last month. I expect to see some K2 satellites out there doing some unique use cases for that space domain.
Yeah, I would agree with basically everything that you shared, that just I mean, and we can sort of hit on the space defense as a sector next. But despite everybody's best intentions, space is very rapidly becoming sort of militarized, and security capabilities and defense capabilities are absolutely necessary in order to protect the billions of dollars of assets that nations have on orbit in the pursuit of their nation's national security. Um, and so whether it's protecting assets that are at geo orbit, whether it is protecting assets at a LEO orbit, or whether it's not buying more expendable assets at a LEO orbit, but having enough of a throughput that the economics of scale work in favor. It's just sort of asymmetric. The economics of scale work in favor of the person putting up the satellites rather than the person trying to take down or disable the satellites or the space assets. It's currently the price point is it's a lot cheaper to put a satellite on orbit than it is to remove one from orbit or to hamper or fully disable one. So if that economic arbitrage starts to change, we'll see that shift. But one of the big trends that I would expect in 2026 is to see the both sort of the continuation for terrestrial security. There's basically a one-to-one correlation between Earth observation, more specifically SAR, but synthetic aperture radar data and terrestrial security are basically go hand in hand, right? And so I would expect to see that correlation hold true. I would also expect to see, sort of to your point, and with some of the demonstrations of remote proximity operations, folks proving that they can get up to another satellite and high-five it, folks proving that they have the capability to deorbit and return or quote unquote recover other assets. There's going to be definite need for, I'll say, orbital security, so security and protection of those assets on orbit as well. And so I would expect to see some hefty contracts. I would expect to see between 100 and 500 million dollars of investment and contracts going to companies and startups that are specifically solving those problems and those threat vectors.
Yeah, I just don't see the growth in Earth observation happening. I think the fact that when we did the China review, the fact that only 8% of their funding was going to Earth observation and the struggles that we've been seeing in the US with the Earth observation market not really growing past a certain point, I think we're pretty saturated in terms of that capability. I think there is some room for growth in synthetic aperture radars, particularly with what we've been seeing with ISI, but I wouldn't be surprised if they kind of plateau out next year. I think that partnership with Rheinmetall is probably the biggest we'll see for a while. I think that will certainly saturate the market for Europe. I could see them getting some growth in Asia, so potentially another big deal there. But given that everybody's moving towards their own sovereignty, and JAXA and ISRO, they have experience building synthetic aperture radar, and now South Korea has their own launch capability. I expect some growth from those regions as well, just so they have their own sovereign capability. But I really think that there's a cap on how much Earth observation technology can be launched into space, and it'll be a lot more focus on getting better insights out of it. So things like blending synthetic aperture radar with existing Earth observation data, things like doing the virtual positioning system that we talked about last week, adding new capabilities, having AI generate insights into this data. I know there's like something we forgot to mention this week about some company finding large lithium deposits.
Oh yeah,
with the satellite. So I think there are still plenty of use cases that can be developed off of the hardware that already exists in orbit, but a lot of the value that's yet to be derived, or where I think most of the growth around Earth observation SAR will be in the processing of that data and deriving insights out of that drive more value.
Yeah, that's fair. That's fair. I just think that if we see in 2026 another number from the hat, but if we see another $100 billion in defense spending allocated across Europe or across conflict zones, I would still expect to see a sizable portion of that going to Earth observation, more specifically going to SAR purchases, whether that's additional assets on orbit or I'll say capacity, or more fine-tuned quality, like you're alluding to, with the increasing the fidelity of the insights, or making things run faster and getting the insights down to the warfighters more rapidly. I still think all of that can sort of fall into the SAR bucket, which as long as people are spending money on defense, as long as there are conflict zones, I would still expect that to be where a lot of money winds up and sort of finds its home. Even though, to your point, there's absolutely sort of a saturation for Earth observation more broadly, and that saturation point is likely going to come for synthetic aperture radar as well. I would not be surprised if that saturation point didn't happen in 2026.
Yeah, I think where I see a lot of the money flowing to, continuing to flow to, is probably in solid state rocketry and hypersonics. We saw a lot of money going to companies like Avio, Ursa, Expo this year. I would expect the conflicts that they're funding to continue. What I'm really hoping for is that some of this technology is advanced, is contributing towards some of the launch vehicle technology, particularly in the case of Avio, since they work on the Vega and the Ariane for the European launch vehicle industry. I hope that some of that money is spent towards developing their technology as they work towards a reusable rocket platform. And space-based interceptors could be a thing. I don't think they will be. I think the demos that might happen next year will kind of fail to demonstrate that that's a feasible capability. But it's another area of growth potentially for solid-state rockets.
So one of the other areas that has grown a lot in 2025, and that I would certainly expect to grow even more rapidly in 2026, is the D2D market, direct to device. So we spoke about how the Bluebird 6 went up earlier this week, and how that the Bluebird constellation is effectively sort of the first D2D capacity that's already on orbit, the first folks to do it. And I believe they went up with an Indian launch provider. So, I think for the D2D market, Spectrum is going to wind up being king. I think Spectrum will wind up being sort of a one-to-one correlation to market share. That if you own half the spectrum, you own half the market share. And if that's sort of where it comes down to, then that would indicate that the technology itself is sort of largely going to wind up being commoditized. So I think once you sort of get the capability to build a satellite that's able to go directly to a device, not need to go through multiple relays or go through a ground station and then a tower and then to ultimately to the device. I think ultimately, once you get that sort of capability, the end consumer and the carriers who service those end consumers, sort of the B2B to C, I think both the second B and the ultimate C, because the customers don't care. The customers wouldn't care at all. Like, hey, so long as the phone works, right? So long as the device works, so long as it has access and data wherever it is, I don't care if that's coming from a tower. I don't care if that's coming directly from a satellite. I don't care if that's coming from a Wi-Fi signal for the most part, right? Like, folks are going to be super agnostic to how they're actually getting their data. And so I think that for the most part, the actual service providers themselves, the businesses who would be sort of buying that data from the customers, will be largely agnostic. I think sort of the bigger play is if the D2D satellites start going from like a B2B to C model to a B2C model where they're selling directly to the end customers. So like, I don't think we'll necessarily see that B2C model play out in 2026. But I would not at all be surprised to see sort of SpaceX and Starlink win up a lion's share of the market and position themselves to be able to do exactly that effectively by partnering with Apple, like we discussed earlier in the year.
Yeah, I think Starlink's just going to dominate this whole industry next year. I feel like Europe's going to have to back off, or it would be smart of them to back off. I feel like they're positioning themselves to dump a lot of money into technology like light speed, like OneWeb. It makes a lot of sense when it comes to defense applications. In which case, I just don't see why they don't go with a higher orbit like GEO, like we talked about with the Stranos or Swiss 12 or Ascend using those secure geocomms situations. Like most of their conflicts are going to be in a specific region. They don't have much outside of Europe. And so it doesn't make sense to build out a whole constellation that covers the globe. Instead, kind of work on that technology. Or even come to some sort of like compromise and go into MEO like China does. I think Starlink is so far ahead that they're gobbling up spectrum, like with their acquisition of EchoStar this year. They're taking all of the customers, like the business customers, T-Mobile and Verizon and heck United, like just companies that would be using their product. They're taking them before these other companies can even get to offering that service. And they already have some direct-to-device. They have like 650 direct-to-device satellites in their Starlink fleet already, and 15,000 more under review for VLEO. If that gets approved, that's insane. I mean, they can meet the launch cadence because it's only VLEO. Like they can just start, lofting tons of them because they don't need as much. They can put more Starlinks on because it's a lower orbit, so they can have higher launch capacity. So their cadence is only going to get better. And those satellites are going to blast out the frequencies bands that some of these other constellations are going to try to be operating at. So it's going to make it very hard for companies like AST Space Mobile or OneWeb or Telesat to kind of move into the same domain as Starlink. And I think they're just boxing everyone out. And it's going to be really hard for other companies to compete. I think the only edge that some of them have are like AST Space Mobile with their unique phased array technology, but how much of an advantage that gives them is debatable. And they can't scale because they're not a launch provider. So, it's cool to see that they're using Indian launch vehicles. It does save them some money. It is a very capable launch vehicle, but I think that they're still, hamstrung by the launch cadence and the financials that can support the kind of constellation they would need to compete with Starlink. So I think it really is going to be a matter of carving out your own niche. I think some of these IoT providers might find some money there, but not the size of D2D. I think companies that can figure out the high persistency play for business customers might be able to carve out a niche there. So again, I think companies that are doing like small geo satellites would benefit here. But in terms of companies that I think might try to target a more business customer base versus the entire world like Starlink is, would probably be AST Space Mobile. And I would expect them to pivot into more B2B business next year.
Yeah, there's to use sort of the old framework, there's no way to compete with a sort of cost leadership play, right? Like if SpaceX and Starlink are effectively already setting themselves up to be the cost leadership play for direct-to-device. Now, if you think that the direct-to-device market is going to wind up being sort of a standards war, more of a winner-take-all scenario where it's like VHS versus Betamax, if that's sort of what you think is going to happen, then you wouldn't want to invest anything in this market because those standards wars are terrifying, and there are no survivors, right? Only there's one winner. They take everything. Everybody else is left with nothing. So I think you're right that the D2D market is not explicitly going to be the winner take all situation, but it's absolutely going to be dominated by Starlink and SpaceX. And so like AST Space Mobile, I would agree with you that their best bet for success moving forward is to sort of differentiate themselves. Like, hey, SpaceX is what's going to get you the D2D capability at the cheapest price point, but we can get you that capability and then some. And so again, like to the end consumers, to the actual end customers, you and I couldn't care less what satellite or what radio tower my cell signal is pinging off of or my data is coming from. But there's going to be some customers, not the folks who are more price sensitive, but there's going to be some customers who are very sensitive about that and would be great potential customers and partners for some of these more specialized players who maybe don't have the spectrum necessary to compete on the massive scale that SpaceX is able to, but whose customers are willing to pay sort of a hefty premium in order to get the special service or the white glove service case that they would need.
Yeah, which I think is going to be businesses or defense, and I think those are the two other markets that can be competed for at this point. So I mean, there's lots of other features in space that countries are competing for other than just communications. Communications is one of the largest kind of sectors in space industry, but we've talked about a number of different technologies that are being developed for what we're calling space sovereignty. So key technologies that each country wants to be able to do themselves in order to protect themselves from the risks of supply chains collapsing and global conflict, or being too dependent on a country that they could eventually kind of be dependent upon when they don't want to be. So the big players we tend to talk about are kind of Europe and China. I think they are in two very, very different positions and kind of either side of the US in terms of progress. I think Europe will continue to lag in the new year. I think they're doing everything wrong, continuing to do everything wrong in terms of how they're developing their space technology. They've continued to stay behind the US, one, because they're dependent on us until this year, but two, because they're so fragmented in their decision making that they can't come to a cohesive kind of decision. And I think it manifests a lot with Ariane 6. They spent a lot of money developing a rocket that was generations behind what the US was developing. They are nowhere near a reusable space capability, launch vehicle capability. We see a lot with companies like ULA, who's like an entrenched defense provider. And I think it's the same with Europe. They've become too entrenched in their major players. They're trying to get more money to their earlier developers, but it's going to take time. And I think it's not going to be manifested this next year. We talked about a lot of money going to standing up new spaceports in Norway and Portugal, developing key rocket technology across different levels, like the reusable first stage, orbital tug second stage. They're spending money on dozen different launch vehicle companies. They're spending hundreds of or tens of billions of dollars on hundreds of different space companies across Europe. But there's still a lot of conflict between the nations in terms of where that money goes. And there's still a lot of gripes being made about some of these consortiums that are being formed amongst their large stalwart players like Thales, Airbus, Leonardo, OHB, that I think a lot of the money is going to flow to them and then not kind of flow out from there, which is what they really need to do if they want to stand up this capability. And really, I think if they model themselves after China and had a more cohesive central structure to their planning, that they could see more progress. But even with China, it's taken them, years. It's going to take them decades to get to where they want to be. So it's really not something I think we'll see next year. But for China, I think next year we'll see a lot of their planning paying off. They are very close on a reusable launch vehicle. Having 3 different launch vehicles ready at the pad to make those attempts not only gets them close to US capability, but I think will allow them to leapfrog us. If they're able to get to 3 different reusable launch vehicles, now suddenly, they're beyond our capability by numbers. Like by capacity, they're still behind, and they'll remain behind in the next year. But in some other technologies, they're ahead of us. Like rendezvous proximity operations is better than ours, at least from a public commercial standpoint. Defense standpoint, I think they're a lot closer. But I think in the next year, we're really going to be panicking from the US side on that particular technology. And I think some of their communications technology, some of their long-term planning is paying off. The PNT systems they've created are more resilient to warfighter to conflict situations, and I think that's going to pay off for them long term. And you'll continue to see upgrades to that system next year, as well as some of the introduction of their mega constellations that are flying in some higher orbits, and quantum technology. I think that's going to be one of their key technologies to leapfrog us in terms of Earth applications. And we'll certainly have a race to the moon with them. Maybe not next year, but in the next couple of years, it will be. I think next year we'll see more of a competition in space habitats as the Tiangong continues to expand its presence in space, as the US continues to move towards privatized space habitats to replace the ISS.
Yeah, I think there's a lot to unpack on the international level. Broadly speaking, I agree with you. I think China is absolutely nipping at our heels, and I think China is going to continue to make progress. I mean, they've had a couple of failures to recover the first stage of their Long March 12A and 12B variants. By the end of 2026, they will have successfully done that, and I would expect them to be at the three functional, verified and validated launch vehicles with recoverable stages. Um, I would agree with you that Europe will. I think Europe is still going to be making progress, but I would agree that they're going to be making progress at a slower rate, in large part because they have made a lot of progress everywhere apart from the sort of the core of launch itself. So I agree with you that one sort of the implication of what you shared is how critical launch is to the entirety of the space ecosystem. Wholeheartedly agree with that. And I also agree that Europe and the ESA are well behind in their launch capability, largely because of how much bad money they threw after good at their incumbents and their sort of entrenched solutions in the area. But I think that Europe will continue to lead in their push for sovereignty everywhere apart from launch. Um, and so I think by the end of the decade, that's going to be the big European sort of sticking point and priority is getting sovereign, recyclable, reusable launch capacity, launch capability on board. So definitely not happening this next year, but we're very much aligned that like in order for them to be a peer of the US or of China at this point, that's what they need to be able to do. Additionally, I would expect to see sort of Russia continued to be sort of phased out of the broader global community's space supply networks. The US has been doing that pretty intentionally. China has also been doing that pretty intentionally. Europe is very much doing that intentionally. I would expect to see that trend continue. And given that India has been one of the sort of growing and leading players in the space ecosystem, massive amounts of engineering and manufacturing capacity and expertise in the country. There are some launch providers as well. However, it's all been sort of horizontally specialized, so there hasn't been to to the to the effect of China's prioritization or strategic planning, or the U.S. or even Europe's. India's approach has been much more sort of privatized, partnered with the government. I guess more in line with what the U.S. has been doing. That's been somewhat successful. Um, so there's a possibility there that India and Russia might see some overlap and might decide to sort of partner together in some various capacities in the coming years to try and help the two nations sort of slipstream or leapfrog off of each other to advance each of their space capabilities separately.
Yeah, I think India and China, I think Russia is still going to be a player, but I think it's just going to be more partnerships than its own space agency, just because of how much their space agency struggled recently. But they still have like technical interchanges with India. Like they provide rocket technology to them. They have like launch pad partnerships with China, and they have a lunar partnership for some of the Russian lunar rovers and in situ resource utilization. So, they're not out of the game quite, but I think there's a shift to who they're going to be working with, and I think it's going to be they're probably going to move more towards a uh, like a subsystem or system integrator provider role for some of their partner states rather than a space power that they've used to be.
I would agree with that. I would agree with that. The becoming much more of a horizontal specialist, playing in specific areas where there are other players. So it's not like a Russian technology or capability is a failure point for anybody else's sort of sovereign space capabilities.
Yeah, like I don't see them developing some commercial technology. I think they're going to dump all their money into defense. Like the fact, I think we talked about the Mosaic satellite recently. it's like a stealth satellite. That's one of the technologies that they're focused on, and that they're doing well compared to other countries. So I think they're really like picking certain things that they want to spend their money on and focusing on that.
Yeah, yeah. In addition to sort of the national competition and the international stage, the sort of the lunar race and the prioritization of the lunar economy here stateside is, I mean, NASA's and the government's explicit prioritization of space dominance and space leadership, and the moon base being a stalwart part of that goal. I think this is going to lead to a massive increase in investment. We spoke about it before, and I've hit on this several times, but the U.S. government says we want to do something, and then the private market starts investing in doing that thing, because the biggest customer in the world, the most guaranteed, highest quality money, is always going to be a massive U.S. government contract, right? So like they say jump, private market typically says, okay, how high? And so this push for the lunar base, this push for the moon base, a permanent presence on the moon, there's some massive technological hurdles that need to be overcome, and there's a lot of companies that have already been sort of working on that. And we alluded to the fact that there's a lot of overlap with the orbital data centers, with some of the massive space infrastructure projects that have been out there. Those have, in some respects, been, until more recently, they've been more solutions without a customer. Effectively, like, hey, we've got this great product, we've got this great piece of technology that does this thing, but it doesn't actually solve a problem that people are willing to pay for. The biggest customer in the world just said, we want to pay for this. So I would expect to see massive amounts of investment and money flowing into the lunar economy on the back of both sort of lower interest rates and the explicit prioritization and statements that we've heard coming out of the White House and coming out of the NASA headquarters.
Yeah, I just don't know if I see as much money going into this as you're implying. Like the fact that all this is going through NASA just makes me think that there's not as much money being signaled as like a defense contract. I think like the amount of movement we're seeing based on the PWSA tranches that are going out, like the MDA Shield, IDIQs, like that's massive amounts of money being deployed. And we're seeing real shifts in the market from that. Like all this consolidation, like Rocket Lab buying up a bunch of companies, Voyager buying up a bunch of companies. Like we're going through another round of consolidations kind of based upon these defense contracts. But when it comes to lunar, I think it's been drawn out so long, both because the amount of money that flows through NASA is lower, the amount of technical rigor, not just from NASA, but from a lunar application, is higher. And so there's a real like bottleneck that all this has to go through, from maturing technology that doesn't have a huge profit to it, based on money that's not guaranteed because NASA's budget fluctuates a lot. And the fact that a lot of this can be challenging to deploy until launch vehicles are able to get us to cislunar orbits, which before it was pretty much the prohibitively expensive heavy launch vehicles like Falcon Heavy, Delta. But with New Glenn coming online and some price pressure on SpaceX to develop a more cost-effective launch vehicle for cislunar orbit, I think we will start to see some movement. But whether private investment manifests to kind of move this along in the next year, I am a little more skeptical of. I think what we will see next year is major movement from the companies owned by Cam Ghaffarian, because he seems to have major political power in the U.S. right now, and companies like Axiom Space have some real momentum behind them, and the contracts that he owns surrounding Artemis with Intuitive Machines and the success behind the Intuitive Machine rovers, I think will propel that company quite well. But I doubt that any of the other companies playing in this space are going to be showing as much progress in the next year as he is.
I think Cam Ghaffarian is very much sort of a very much a central figure in all of this, very much a wheeler and dealer. But I do think that there's going to be more explicit money going into this than not. The combination of sort of lowered and lowering interest rates means that there's going to be more private capital, more dry powder than there has been over the previous, really since like 2023, 2022, since sort of like the high of the investment COVID sugar rush. Insurance rates got really high. Dry capital money came a lot harder to come by. I think we're going to see money becoming a lot easier to come by. There's going to be a lot more money that flows, and so I think the private investor appetite for more capital intensive projects is going to increase as there's more capital that needs to be deployed in accordance with limited partner agreements.
See, I'm really torn on this because your assessment is very reasonable, and I feel like I disagree.
I just expect to see a lot more private money ready that needs to be deployed. And while I agree with you that NASA is certainly a lesser signal than the DoD or MDA in this case, like a defense contract is always going to be better than a NASA contract. I think that the indications are that the lunar base is the indications and impression that I have is that the lunar base is more of like a moonshot prioritization than it is like, okay, this is what we want to do by the end of it. Like, no, we need to do this. In order to do this, there needs to be a lot of money. And the fact that Isaacman likes the contracting model means that if that assumption holds true, it means that NASA is going to start contracting out large swaths of the tech stack to private companies, and that there's going to be a huge amount of government money that goes into that as well. Not necessarily NASA money, but more specifically government money.
I guess I just
so
question.
It's more about whether or not you buy. It's more about whether or not you buy that this is the priority that the administration says it is.
That's what my feeling is. It's like I don't buy that this is actually a priority. I think it's going to shift not just throughout the year, but over the next years. And I think that makes it not a strong enough signal to pressure private money to go all in on this. But I think that they are going to anyway because of these other indications that we're seeing. So I don't know what your opinion is on how much pressure that applies to the private markets, but the fact that like orbital data centers are becoming a thing, like space solar power is becoming a thing, like these giant infrastructure plays that make sense on the moon, or it would make sense if they included the moon in some aspect. Like the idea of them, the promise of them are new $1 trillion industries in space. And I think that the people that invest in the coming year will be getting on the ground floor of that. There is still a significant amount of speculation as to how, over what timeline that plays out, what kind of ROI you would get on your investment in the next year. But I think at this point it's kind of inevitable, not just because the government says it. I think that's honestly one of the weakest indicators that we're almost there. What I think one of the biggest indicators is that the two main private companies that are very interested in lunar exploration have made it past one of their biggest hurdles. The fact that Starship and New Glenn both came online this year means that Blue Origin and SpaceX are clear to start focusing on lunar habitation, and it's backed by two of the richest people in the world. So just between these two companies, over $1 trillion of money is at play for developing this technology. I think that is the stronger indicator in my mind than the US government at coaxing other investors in putting their money into these applications, not just by backing potentially space if they do IPO, but all the companies underneath that supply the subsystems and the services to these companies.
That's a fair point. I mean, ultimately, investors need to know that there is a customer, that there is an end buyer for the lunar economy, right? That it's not just a whole bunch of engineers selling engineering services to each other and other engineers. There's got to be some sort of end buyer for everything. And so even if it's just the US government saying like, hey, if you build this, we will buy it, and it's less of the US government saying, hey, we're going to the moon, this is happening by the end of the decade, even if it's the former and not the latter, that still sort of would suffice in a large degree to de-risk the industry for that regard. Because the big sort of overarching thing with space is like, okay, one, it's too expensive. Two, who is your end customer? Space is like hard to do, so it needs to be really clear who's going to be paying you money on the other side of things. And three, it usually takes too long, right? So like,
Yeah.
having answers to those three questions is sort of the starting point. And by what I'm saying, big picture, is that we now have answers to those three questions. Like yes, no, the answer is yes for all three of those. So it's like it's a pretty darn good signal. On the more macro level, we're seeing, and I sort of started to allude to this, but we're seeing interest rates come down, and one would expect there to be a lot more dry powder in the market. So one would expect a lot more investors with a lot more capital looking to deploy that. The last time this happened, a lot of companies and a lot of founders went out and raised money, and they raised at valuations, and they raised amounts of money. So they went out and they raised a Series A at a pre-money or post-money valuation. Both the amount of money they raised and the valuation at which they raised that money wound up being sort of surplus or in excess of what the true value and the true need of the company was. And that's sort of that investment sugar rush of COVID that I'm sort of alluding to, when there was no interest rate effectively. And so folks were going out of their way to try and deploy capital. So if it's worth $1, folks were paying $1.50 just to sort of get the capital out the door and get in on a deal before somebody else gave them $1.50, and then you missed out on it in its entirety. Point being that the big takeaway for founders, the big sort of recommendation is that fundraising in 2026 will likely be lucrative for founders. It will likely be a great market for you to go out and do a raise. However, a lot of founders did a raise in 2021 and then had difficulty raising in 2023. So 2026, I think, will be a great year to do your last round of financing, and it'll be a challenging or tough year. It could potentially be challenging or tough in future if 2026 is your first round of financing, because money's going to be easy to come by, but it's going to get a lot harder to come by. And so if you raise 5 million at a 20 million pre today, in 3 years, if you've made progress, you may be sort of stuck looking at trying to do a $5 million raise at like a 26 or $27 million post, which would constitute some pretty serious dilution for the founding team. So just be cognizant of that this is a great time to get in, but I would expect that prices and valuations and everything will probably sort of come down in like a couple of years once interest rates sort of go back up a little bit.
So you think there'll be like a glut of, or not a glut, do you think there'll be a lack of new companies coming into the space industry? Because while I see the industry growing, like there are indications that it's going to be difficult. Like you're pointing out that it'll be hard to launch a company if the funding gets harder to come by in the coming years. And we're also seeing a lot of consolidation, like we saw back in, like 2018. Like companies like Voyager, Intuitive Machines, IonQ, Rocket Lab, like and the European consortium between Thales, Airbus, Leonardo, like these are all instances this year of large consolidation across the industry, particularly in key technologies like optical terminals and spacecraft platforms. But to me, that makes it clear that like that's going to be hard to become an incumbent because a lot of these now big players have all the technology they need to bid on these large contracts, and a lot of the large contracts like the MDA Shield contracts are primarily going towards large incumbent players like Rocket Lab, like Lockheed, Northrop, Boeing, L3, and less towards some of the smaller companies. I thought it was interesting that MDA Shield claimed that this round of funding identified and qualified 2,500 different companies to be able to win contracts under their MDA mechanism. So I think it's crazy that there's like 2,500 space companies out there doing something. That means that there is a lot of competition, a lot of consolidation, a lot of headwinds in terms of funding. I think all of that means that it's going to be difficult for new space companies to come up unless they have some key differentiating technology that doesn't really exist yet. Which is a growing possibility, but I think in the next year it might be interesting to see that most companies are just growing rather than coming into existence.
So you bring up a really interesting sort of point. So I'm a sucker for the entrepreneur. I'm a sucker for the founder. So I would always encourage folks who have ideas, folks who have a piece of technology that they want to take to market, that they want to develop and build out. But do it, go for it. It's always the best time to do this was yesterday. The second best time to do this, right? Like best time to plant a tree was 10 years ago. The second best time is today, right? So like I 100% would back that. So to your point, the fact that there has been a lot of consolidation means that the incumbents are bigger. So yeah, it's going to be harder for startups today to become an incumbent. It's going to be harder for a startup today to become the next sort of Firefly Aerospace that is a launch provider sort of competing with SpaceX, who winds up and achieves an IPO. What that means is that exits are more likely going to be to strategic acquirers. So like, okay, great. Rather than a 15-year journey to $1 billion exit, it'll be a 3-year journey to a $150 million exit.
So you don't expect a SPAC boom like 5 years ago?
I mean, there could certainly be a SPAC boom, something like that. There could absolutely be a whole bunch of folks who push and really want to go to the IPO market, and that could absolutely happen. My point is more that like if you're starting a company in the space ecosystem today, the odds that somebody sees what you're doing and is like, oh wow, that's awesome, we want to buy that capability rather than try and build it ourselves, the odds that happens is higher today than it was a couple years ago. So that's sort of the point. And the secondary point was that, hey, $150 million exit, like a $300 million exit, that's a pretty good day at the office. So that's, IPO isn't the be all end all of success, I guess is sort of my point. Well, that will do it for all of us here at the Space Times podcast. Thank you so much for joining us on this special New Year's episode. As always, please drop us a comment, check out our socials, and follow us on Spotify, Apple Podcasts, YouTube, or wherever you're receiving this signal. As always, I'm Paul Mayer here with Harrison Lambert. Until next year, this is the Space Times podcast, signing off.